Welcome back to Ferocious Education. This is Ed. Today I'm going to be talking about UWMC. It's a different update than I usually do, even though if you'd like to watch my previous videos, you'll find it in the description below. Now, for this one here, I'm going to go ahead with a bit more of due diligence updates, then towards a little bit of a small presentations for the questions that I did ask the CFO and the answers that I did receive. They were very helpful, by the way. And then a bit towards technical analysis. And in a technical analysis point of view, it's more regarding where I see the stock in the future rather than the current very much of an intra movement. So let's jump right into this one. So UWMC, if you haven't heard about this one here, it's one of the biggest wholesale mortgages lenders in the US. They are growing by the day, and there's always this kind of rivalry between them and Rocket just because they both went public in around the same time. Rocket did go ahead with an IPO, this one went through a SPAC. So the process is different, but they're both public around almost the same time. So let's jump right into, let's say, the latest updates here. And one of the latest updates that we've seen here is former main executive Desmond P. Smith joins United Wholesale Mortgage as Chief Growth Officer. And you get to see here, just a quick perspective. He served as the Senior Vice President, Chief Customer Officer for Single Family Business for Fannie Mae. Now, Desmond is an innovative and thoughtful veteran of the mortgage industry who will bring a unique skill set and background to our team that will allow us to catapult the broker channel forward. That's something from Matt Ishbia, the CEO. And then adding here, I've had the privilege with working with many different companies and I'm proud of the impact I was able to make. But when it was time to the next chapter in my career, joining the team at UWM was a no-brainer, Smith said. UWM was one of my top customers at Fannie Mae. So I'm very familiar with how they operate and their lenders. I've always been impressed by their dedication and focus on the broker channel. I've had the benefit of understanding all the origination channels. Mortgage brokers really are better in most instances. They offer a more efficient experience with a cheaper cost. I'm ecstatic about the contributions I can make to ensure more people know that this is to be true. And if you would like to go ahead and check this person's here's LinkedIn, you get to see he was SVP or Chief Customer Officer for almost 4 years and a bit at Fannie Mae, Capital One Home Loans for over a year, CTI Managing Director for more than 5 years, Senior Vice President at JP Morgan Chase for more than 4 years, almost 5 years, Senior Vice President for Wells Fargo for almost 9 years and 7 months, so almost there, 10 years, or 9 years and a half, I would say. So that gives us a bit of an update. Now, in terms of their recent financial highlights, and this one here, I spent a good amount of time taking a quick look into everything, including the transcript. So I'm going to just go ahead with some of the highlights that they have given. Record origination of $54.7 billion in loan volume, a 71% increase from the fourth quarter 2019, $31.9 billion loan volume, bringing UWM's full year 2020 production to $182 billion, which is 69% higher than UWM's prior record production for 2019 of $107.8 billion. Total gain margin of 305 basic points in fourth quarter 2020 compared to 110 BPS in fourth quarter 2019, and that's really amazing. Reported fourth quarter net income of $1.37 billion as compared to $149 million in the fourth quarter of 2019. So that's almost roughly around 10 times more than that, or 9, I would say. So that's a 900% increase in terms of net income. That's amazing. Increased UWM's equity to $2.37 billion at December 31st, 2020, as compared to $661 million at December 31st, 2019. Closed private senior notes offering of $800 million ending in fourth quarter. Actually, I'm not going to go through that just because it's just basic stuff. But in terms of operational highlights, here's some of the things, for instance. Their days to close are approximately 18 days in the fourth quarter of 2020. The industry's average is around 52 days. That's 10 days higher than the 9 months average of 42 days. As of September 2020, for the month of December, UWM days to close was approximately 16 days, while the management's estimate of the industry average grew about 54 days. And so that's massive. Our commitment to high credit quality is shown here by their FICO score of 760. In the fourth quarter, it was around 757, 760 for the fourth quarter, 757 for the full year. And this is reflected on the MSR 60 plus delinquency and forbearance rates, which are well below the average of the industry. I'll go through that in a second. And we can go ahead in terms of their office expansions, as well as their growing of the team, going on to almost 8,000 people. There's also technology updates relating to UWM's InTouch, which was launched, and the launch of Blink Plus. The InTouch one is a mobile app that provides the ability for independent mortgage brokers to navigate everything from underwriting until the loan is cleared. To close from anywhere, they have their phone, including document upload, e-sign capabilities, and push notifications and more. Launch Blink Plus as an enhancement to the online mortgage application launched in 2016, which includes the ability of automatically pulling credit, e-signing documents, etc., point of sales, or loan origination system, LOS, customer relationship managers, the list goes on. The first quarter 2021 outlook. Closed loan volumes between $52 billion and $57 billion, which is an increase of 22.6% and 34.4% as compared to the $42.4 billion in the first quarter of 2020. Total gain margin of around 200 to 235 basic points, which would be an increase of 110 to 142% compared to a 95 BPS in the first quarter of 2020. So that is massive as well in terms of growth. And I want to go back towards comparing the FICO scores. If you do recall, they did say that their FICO score is around 760. And from my conversation, I'll go through that in a second there. You'll take a look here and just keep that in mind. Rocket Mortgages, minimum credit score is around 620. And the minimum down payment is around 3%. But taking a quick look, let's say United Wholesale Mortgage. On this page here, it says the minimum is actually 720 for your FICO score, and your down payment requires a minimum of 20%. So just a quick thing, you get to see right away that UWMC is very picky on the type of loans that they actually take. And that is the main reason, is because they guarantee a lot of these things. There's a lot of guarantees. For instance, if they don't close it within a certain time, they pay 50%. It's because for them, quality and being fast, that is two things that they really focus on. And then going on next towards institutional buyers. Now, institutional buyers, you get to see some are bullish, some are bearish. For instance, on the month of February, we do have a bunch of institutional buyers. It's ins and outs, so it's a little bit mixed. But I think that's going to change for one reason. So if you go to the Russell's website and you go looking into the additionals for the first quarter of 2021, they're going to be added around March 22nd, so in a month. For UWMC, for the Russell 1000 index, and for the Russell 3000 index, they're also going to be added there. And so that is bound to bring more institutional buyers. Oh, actually, yep, my bad. They're going to get more institutional investors because of institution that monitors the Russell funds, etc. And then if they are actually following that fund, they would go ahead and also invest into the stock. So that is a bit more bullish because you get institutional buyers. Now, I did have a lot of people coming in and saying, well, Ed, Matt has a large share in control. It's a one-person kind of ship or whatever, right? And what I wanted to do was I quickly went ahead and did go to the academias. I just wanted to see a paper to see what is the benefits of having a founding family ownership firm versus an outsider institutional or an outsider CEO. And the abstract of this reads as follows. We investigate the relationship between founding family ownership and the firm performance. We find the family ownership is both prevalent and substantial. Families are present in 1/3 of the SP 500 and account for 18% of the outstanding equity. Contrary to our conjecture, we find family firms perform better than non-family firms. Additional analysis reveals that the relationships between family holdings and firm performance is nonlinear, and that when a family serves as a CEO, performance is better than with outside CEOs. Overall, our results are inconsistent with the hypothesis that minority shareholders are adversely affected by family ownership, suggesting that family ownership is an effective organization structure. So what does this say? This basically says that having family ownership, such as the founder, basically still having the family founder ownership, which basically means, for instance, like a founder like Matt, still has a massive ownership of the company. And then the second one here is, for instance, saying that they actually, the relationship there is nonlinear. So we're not saying, oh, twice or three times, it's exponential. So, or at least polynomial. So that means it's not linear. Linear means it goes on a straight line. Nope, this isn't. If you put it on a graph, it's actually a lot better. The third thing is there has actually been a bit more of a misconception that the shareholders are the ones to suffer out of family funded or family owned or founder family owned companies, and that is in fact not true. And this paper actually goes ahead and discusses everything you might actually even know. So for instance, if we were to look into the potential benefits of family ownerships here, for instance, and it goes on about looking into the SP 500 companies. It looks into 403 firms, and then finds so that substantially the companies that are family owned ownership founders are a lot better. But anyway, I'm not going to go through the details because it's around 28 pages and I can go ahead for days talking about academic papers, and this is not the purpose of this video. But before moving forward, just remember, FICO for Rocket, 620 is the minimum with 3% payment. The UWMC, United Wholesale Mortgage, is around 720. And for this, we're going to go towards my presentation that I just made. So if you haven't done so, please make sure to subscribe and leave notifications on because it helps my channel a lot more than you can think of. Now for this one here, I did compile a bit of presentation materials from other decks that they did have, as well as some of the questions that I did ask the CFO and all the ones that they did answer right on here. So let's jump right into this one. So for the first thing here is the best way to get a mortgage is through a mortgage broker because it's faster, it's easier, and it's cheaper. Next, wholesale channel share of the mortgage market, and you get to see the wholesale channel in 2008 was massive, and then it did decrease all the way in around, let's say 2014 2015, and plateaued. And then you get to see that in 2020 estimated was around 21%, and it's continued to increase by 2026, etc. So that's a good thing. Faster, easier, and cheaper. They have a faster closing time, around 17 days. Again, this days I think it went down to 15. And the Rocket Mortgage, for instance, application ready to close is around 29 days. The industry average is around 47 days. I know the industry average has increased. I'm not sure about Rocket, but UWM has also decreased. So really the difference there is massive. More efficient. So in terms of the average loans per month per production team member, UWM is around 8.8 compared to Rocket around 6.7. In terms of loan quality, their FICO average is around 757. In December, is around 760. Debt to income average is around 36%, and loan to value average is around 71%. Our focus is on high quality borrowers, and lower risk loans drives tremendous scalability. Underwriting quality and speed are not mutually exclusive. Average FICO consistently top 3 amongst peer. And you get to see for the NPS, which is a widely considered benchmark of client satisfaction, you get to see they're sitting at 88, Rocket 74, JetBlue 61, Amazon 55, the list goes on. Chase is actually -1, Wells and Fargo is around -2, etc. And you get to see for the projections in terms of the future there for 2021 and 2022. Your volumes are around 210 billion, 240 billion for 2021 and 2022 respectively. And when you look at net revenue, you're looking at in billions around 4.7 and 5.3 respectively, which is still bullish. So why investing? Reliable dividend support by consistent earnings despite industry cycles, strong balance sheet positions to withstand market risks, dominant player that is laser focused on one market, wholesale, with significant upside ahead, growth in book value / equity, continued focus on managing for long term, controlling expenses, declining cost per loans, strengthening the broker channel with training, technologies, and services. And here's some of the questions that I did ask, and I'll discuss this one in details a little bit at the end. So the questions: they have 1,000 technology team members. What's their vision? So first off, they're a tech company. They're going to continuously develop new tech, and then differentiate with speed and services, fast training, and low in-house costs for them. What happens if the house market takes a hit? The industry delinquency rate is 4.7%. Theirs is below 2%. The forbearance rate is 5.46. Theirs is below 2%. Balance sheet: they have cash, US-backed loans, and they also have derivatives and hedging and MSRs. So that's why their balance sheet is pretty much to focus on fortifying their balance sheet, because if the market goes under, they're still afloat because they can hedge their positions as well. Balance sheet. Okay, so we did that. Little to no direct liability. They're not refinancing, and such as other companies that are really focused on refinancing. So some of their competitors that are refocused on financing majorly is Rocket, and this company here, UWMC, is not focusing, or they're not free financing focused company. Now, they have the ability to just take off products from the market rather than having to hold on to them longer. So for instance, once the pandemic hit, or actually just before the pandemic hit, they took off the jumbo loans. And from there, they were able to stop that kind of risk of happening for instance, massive interest variations. Over 2,700 underwriters, 1,100 IT marketing, 1,100 IT marketing embedded is around 150 people. So in different teams marketing, they're not just one isolated team. They actually know what's going on, and they're helping they help deliver to marketing towards the customers at a better rate. And client and experience innovation team. We expect 2021 to grow significantly from an origination perspective, and we're very excited about it. Now, first thing is that they have quality over quantity. The current market share is at 35% from 20% in 2020. And they can increase that, however, they're focusing on the quality of loans. And you get to see that, if you do remember, well, actually, I'm going to go to FICO credit score. I'm going to mention that in a second. Time is money. December UWM was around 16 days, so lower than the market average of around 58 days. And so the whole point is 18 days to 56 days. They're around 3 times faster. And the reason why speed matters is that, well, first off, when you go ahead and get a loan, that interest rate where you start the initiation is usually locked in. And any changes in interest rates, especially in today's industry, the actual mortgage broker would take a hit. And having around 16 or 18 days, they're able to cut that cost significantly. FICO credit score, they have cutoffs. So they can that can impact their FICO. Other brokers can make exceptions for friends and family, etc. They don't. And the average for FICO in 2020 was around 757 for UWMC, and in December was around 760. And you get to see why that is the case. Rocket, for instance, their average, as we did look back, I think it was around 620 off the amount of it was 620 for the minimum credit score. For UWMC was 720, so around 100 credit scores higher, and Rocket only required 3%. So you get to see that they're very picky in terms of the loans they get because their FICO numbers are really great. We expect 2021 to grow significantly from an origination perspective, and we're very excited about this. We expect production to be between $52 billion and $57 billion, with gain margins between 200 and 235 basis points. We will continue to double down in technology and take it to a whole another level with our homegrown build system. And through the speaking with them, I did get a lot of good points as well. So the CFO has actually also navigated through the financial crisis, and they're understanding, or they have a good understanding on what things can expose them there and how they can stay afloat. And from my understanding, from everything they did mention to me, they keep that in consideration, and if the market does take a hit and the housing market does crash, for instance, they're still able to grow their market share there by and continue to grow compared to their peers. And for me, I will continue on into towards technical analysis and then tell you about what my investment has been for this one. So let's jump right into that one. And so now towards the technical analysis, we can go ahead on to our perspective. We get to see that it is bound for a reversal. It's a non-brainer, but I don't want to mention that because it's a long-term. This is a long-term video. It's not one of my short-term videos. So for this, I'm gonna go ahead and say some key points. So for instance, the $850 is a really important resistance, around $9 and then $10. These are important resistances for me. But coming on towards where I expect this one to go ahead. Now, I did take a starter, okay, and this is a massive disclosure, but I'm also doing this for a long term. So that means I'm not going to sell tomorrow. I'm not going to sell Tuesday, Thursday, next month. I'm looking to keep this around, let's say, 2 years or whatnot, because I'm looking to have a balanced portfolio. And what does that mean? It means that I would like to have around, let's say, 3 to 5% in the real estate market or in the real estate kind of industry there. And I think mortgages such as this company, where they're not really impacted by the house prices tomorrow very much directly, and they would still go afloat rather than go bankrupt. That's something important for me. And a lot of people have been criticizing this one, saying, well, you know what, this is the worst pack in history, just dropped right after. But let me just ask you one thing. Do you remember Fisker when they dropped significantly after? And what had happened? Well, they close at 30 bucks. Of course, there's different news, different companies, etc. But a big part of it is to try to wait for the dust settles. And I think that this is actually a good point for me to invest in. And I started in position. And hey, if it drops to 6 bucks, I'm adding more because I'm leaving this for a while. And if you're a believer in the company, you don't need to worry. I don't check the price points every 3 minutes like a lot of people do. So that is the question here. Are you trading? For trading, it's probably not the best to trade right now. It's not the hottest market. Look for EV for your trading. If you're investing, then I think if you were to continue or to add a small percentage of your portfolio into this one, you might actually get to see a lot of benefits in the future. Of course, I'm not pumping, and you notice that in my tone is that I'm not telling you, oh, you'll definitely do. There is always a chance, and this is one of these companies that I do value over other competitors such as Rocket, etc. in terms of putting in a small position for a lifetime. What do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like. You have a wonderful day.